Guys, it's May 2nd, 2019. It's Thursday. A lot of things are moving and things are just about to get really, really fun here. So congratulations to everyone. Market is finally cooperating and I think we're going to see some bigger moves. And bigger moves with directional options means you are about to make a ton of money. So super excited for everyone, guys. There's so many things to cover. Look, I'm just going to try to go through this as soon as possible. It says here top 3 observations, but I always try to give you a little bit more, guys. Unfortunately, the most time-consuming part of making these videos is the slides. So I apologize, I'm not going to have slide for each point, but just try to really listen carefully and take some notes that should really help out. So number 1, cloud stocks sell off. As you know, just like with Tesla, we've been saying the cloud stocks are topping. That's a sector we want to short. So yesterday, I'm going to show you some charts right now. Cloud stocks unanimously are selling off, which has been the strongest sector in the technology sector. So that tells us if the strongest sector is selling off, I mean, things are not looking as rosy as everybody expects. So number 2, retail stocks forming tops. I mean, you got stocks like Alta, Estee Lauder. Guys, we're going to take a look at the chart in a second. Number 3, Fed finally is recognizing slightly, just a tiny little bit. We all know they've been lying about the low inflation, just like China has been lying about their 6-7% GDP growth for the last few years. I mean, just think about it, guys. Have the prices on cars, have they gone up in the last 10 years? Absolutely. Have the prices on houses moved higher in the last 10 years? Absolutely. Have the prices of gasoline recently have been going up? Absolutely. And they're saying, oh, the inflation is low. They've been keep telling us the inflation is low. Like, it's sure sign that the inflation is no longer low. You see the prices everywhere popping up. I mean, remember we used to pay for the cheese, the milk, I mean, just basic stuff at the grocery store. The prices have gone up over the last few years. But they keep saying, oh, the inflation is under 2%. So, and it's funny how everybody's focused on this 2% inflation number because Janet Yellen started this, data dependency. Oh, our target for inflation is 2%. The inflation probably has been around like 5, 6, 7%. And nobody's been talking about it until finally he just said something about it yesterday. It's like, hey, this low inflation, in quotes, there's been high inflation going on, but finally he's saying something about it, kind of creating for himself a way to actually raise interest rates as everybody's pressing this guy to actually lower them because he knows that the inflation data that they're sharing with everybody, that's not the real data. I mean, the minimum wage, most of the companies have raised the minimum wage voluntarily from $8 to 10 to 12 to 15. Guys, this is signs of high inflation when things that you used to be able to buy for 10 grand are now 20,000. When, people used to make $8, now they're making 15 for the same job. That is sure a sign of very high inflation, but they keep saying it's low. So bottom line is there's some crazy stuff that it's going to be happening if Fed does not raise interest rates, but they have no choice, and they've been kind of keeping it on target saying, well, it's low, it's low, it's low. They know it's high, and if they say it's high, they're going to have to raise interest rates. So that's why the market kind of freaked out yesterday. But more on that in some other videos. Let's focus on some of the important things that are going to help us trade today. The divergence we're observing between BKNG and some of the hotel stocks. Now, hotel stocks, typically, if they're doing good, and I got tickers HLT, which is Hilton, and MAR, which is Marriott. I don't have the slides, so I'm going to just mention a few key things about these things. Both Marriott and Hilton were rocketing higher. I mean, Hilton, I think at one point was up like close to 10%. I mean, it was up like $6, $7. That's a $90 stock, right? Marriott hitting close to the 140s, all-time highs for in a long time. But what happened to BKNG? It dropped $25 yesterday. So typically, when these hotel stocks are moving higher, we would see BKNG actually move higher with them. So the divergence is such, even though it appears to be that the hotel stocks are moving higher on good numbers, for some reason, BKNG is dropping. So that is a divergence. So maybe, even though these hotel stocks did go higher yesterday, they will ultimately reverse over the course of the few days because people are taking money. And I will post a chart of BKNG and all these hotels in the next video, guys, because I think it's raising a very interesting point. This is clearly another sign of a top. Yes, the numbers are good. Why the numbers are good? Because the numbers has been lowered by so much that in relation to how much they've been lowered, they're good, but are they really good? So if you look at it from that perspective, this is another sign of a top. Divergence between BKNG versus HLT MAR, because typically BKNG would be going higher on days when hotel stocks are doing well. Number 5, no one is buying the imaginary China deal next Friday. So at some point intraday, it was all over the news how next Friday we're going to have this, long-awaited grand deal with China. What the market doesn't care anymore. I mean, these headlines used to, and actually for just a brief moment, stocks like BABA, they were popping, and just for a short, brief moment, and then they're starting to sell off. So with that, I don't think there's going to be, even if this imaginary deal is agreed, I think they could agree on something. I don't think they're going to agree on everything. I think this thing is going to drag out still forever. There's no way in shape or form that they're going to agree on everything. So maybe they're going to announce, well, we have agreed on some little parts right here, and we'll keep negotiating the rest. That is likely what's to take place. And on such news, it's not, the market is not going to move higher. They keep talking how about, all of a sudden we're going to go significantly high, substantially higher. You got some big investment funds, banks saying, oh no, we're fixing to take the roof off the market and it's going to go to the moon. So this type of talk typically is present a lot of times when the markets are topping. So, and the cool trade I'm going to give you is W, which does a lot of, it's a retailer here in the States, sells furniture, but it's highly linked to China because it gets all the furniture from China. So today's trades, we're going to review ABMD, EQIX, and W. Guys, there's so many cool trades out there. They're just impossible to record all of them. So I'm going to go through this few, but if you're studying the charts that we've recorded for the earnings, right, then you should have no issue finding some other trades out there easily on your own. So the first one, the cloud stocks are dropping. And if you don't have the win and watch list, guys, here's some stocks from the cloud that you would have on your win and watch list. So BLKB is the ticker. It's a cloud stock, cloud-related stocks. I'm just going to share a few charts. Drops yesterday from 80 to 72 after the earnings announcement. So right after the earnings, it drops and then continues lower. So important key thing here is to observe the behavior. It drops slightly, but finishes much lower. BLKB. Next one, TWLO. Hey, they're raising price targets on this thing, guys. It moves after earnings. It pops from 128 to 145. And where is it back at the end of the day? 128, 129. Slightly lower than where it started. So, guys, just as you're trying to learn these market moves, which move does this look like? Guys, it's a topping move, okay? It's an 11. It's a pyramid. Take a close look. See how easy this stuff actually is? If you study the 13 markets move formula, guys, you're going to be able to start making these really cool, easy observations. Definitely going to help you become a better trader. So it's a move 11 in Twilio, which is a topping move. And it drops from 145 to 128. It's a cloud-related play. And it actually hit all-time high intraday at 145, right before the market opened, and just crazily. It was on our list. Unfortunately, I didn't include it in the trades yesterday before the market video, but guys, keep an eye on these cloud names, because if they pop off their earnings, you definitely want to come in and just buy puts, no matter if they're raising target prices or not. AYX, this is another one. This one actually announced earnings after the close yesterday, so it dropped from 88 to 81. And this one would be an interesting one to watch. I don't have all the charts plugged in on this one yet, but this could drop substantially low, especially, if you consider shorting it on the pop. This could be a good, easy, quick trade right there. Workday, right? The usual suspects for our cloud plays. Workday, WDAY. I mean, it's down yesterday. Of course, this one did not announce earnings, so some of the moves in some other cloud stocks were much larger because they were responding to the earnings announcement. And the moves are larger during the earnings announcement because there's a lot more participants, there's a lot more buyers, sellers, and so on. So your volume spikes, and these stocks are making larger moves during earnings. So this one did not have earnings, still from 208 to 200. I seriously doubt it's going to hold that level today. So we can easily see, remember, our target price for workday is about 170. So that's a nice $30 move over the course of the next couple of weeks. It could become very real. So Splunk, SPLK, down from 139 to 134. It's another usual suspect for us, from 139 to 134. No news, no earnings. Just you see how unanimously the group is dropping. It confirms the sign of the top one more time. So anything that's cloud related on your winning watch list, whenever you see them announce earnings and they pop, short them. When they drop, short them. Remember to short on the bounces. This whole group is going down. Now, what's going on with retail? Guys, this is insane. Are you kidding me? Alta, institutional investors' all-time favorite in retail, yesterday drops 14 bucks. I mean, Alta hasn't dropped like for 6 months. Ever since announced earnings at about 240, went into earnings a couple of earnings seasons ago, and it just moved higher and higher and higher. I mean, this is one crazy animal. Actually did not drop while the whole market was tanking. It just actually kept going higher. I remember the market on certain days was like down 600-700 points. This was like the only stock in the green. So it's finally hit a top, is the point I'm trying to say. And the trade actually is working out nicely on Estee Lauder. So this was a part of our reversal description yesterday. I've gone into identifying how the candle was going to look, and the candle actually ended up looking on the chart. If you haven't looked at it, go to stock charts, plug it in, boom, Estee Lauder. So we're trying to target this reversal yesterday. The reversal actually came in much heavier than I expected, and this is by itself is in a way a sign of a top as well. If you look at the chart, it bounced to all-time highs, just like Twilio, okay, and then it sold off. It sold off to 169, so actually it was quite a bit in the positive, ended up in the negative. And how does this move look? When you take a look at this move, what move is this, guys? It's a move 2, right? So it pops, and then it keeps selling off, making these lower highs throughout the day. All you have to do is come in, just buy this put, just hold on to them. It's a nice for a swing trade, because a lot of times what we identify that stocks that pop, they actually drop on the next day as well. I think pre-market this thing is slightly down. So Estee Lauder, why on earth would you short this thing? You may ask. All the analysts are putting buy ratings. They're talking about it in the news, how great the earnings report. They bid on everything. Look, this market does not care, guys. And again, this is just a sign of the top. When we trade short-term, we want to just focus on these behavioral patterns. So it doesn't matter what the earnings announcements are. It doesn't matter if they're raising target prices. What they're doing is they are selling while they're saying all this positive talk. Now, last but not the least, all the bullish talk in Apple confirms the top. So this is how funny it is. So all the bullish talk in Apple actually creates a bearish reversal candle. I couldn't resist. I just had to put this one in here. Look at this beautiful bearish reversal candle right here, guys. And what are they doing? They're talking that stock up. While they're doing what? Look at the accumulation distribution, guys. They're selling it. Yeah, I know it's confusing. The stock is up 10 bucks, whatever, but they're selling it. This is what they're doing. So pay attention to the actions of institutional investors, not what they're talking about in the news, and you're going to be on the right side of the trade more often than not. So here's some stocks, guys. There's just a ton of things, ton of really cool trades. Keep studying the charts. For those of you that may be taking the 13 market moves course but haven't, studied the charts divergences as much as you should, guys, take this weekend, study it up. I mean, you want to understand why some of these trades are being put together. So if you don't have 100% clarity, definitely take your time, study, take notes, and evolve. Learn something new every day. So here are the trades for the day. We're considering ABMD 250 puts on a bounce. ABMD has been successful and unsuccessful target for us over the course of the last year. We've been trying to short it. It's been reluctant to drop. And it finally gave in. We made some money on the drop for those of you that were very patient and kept staying with the trade. So, but finally, the stock is just completely unwinding. Today after earnings announcement, the stock is down. Not on huge volume. That's why I put it down here, right? So it's down from 280 level all the way to 222. It hit a low. Now it's bouncing to 235. Again, on volume, only 28,000 at the time I'm recording this, about 7 a.m. So bounce is likely before it further drops. So what you want to do with this trade, right? You want to come in on a bounce. So ideally, I hope, because the volume is low, the probability of a bounce is real. And so by 9:30, it may open maybe at 250, 255. So what we want to do is at that point on the bounce, we want to buy the 250 puts. This is why we think it will continue to drop. Let's take a look at a daily chart. In the daily chart, you see, if we take a look at the context of this trade is in December it made this bearish cross and it just failed to break out of this bearish cross ever since. As a matter of fact, it's got multi-top formation right here with diminishing strength from the stock. If you analyze the volume, look how consistent. They just been taking the money out of this thing, and they have not stopped taking the money out of this thing for the last 5 months. Look at these huge volume bars. So whenever it sells off, this volume increasing. It sells off, the volume is increasing. Look how huge these bars are in relation to these volume when they're trying to buy the stock. Same here. The volume bars are huge when it sells off. The volume bars are little when they're trying to buy it up a little bit. And then again, yesterday before going into the earnings, you got a rather large sell volume bar. So this tells us, I mean, it's very bearish, guys. When you see something like this, when you see a stock trading right under the orange line and the blue line, you know, preceding by this cross and multi-top formation, that is a bearish chart. If you take a look at the weekly chart, it does resemble a head and shoulder. You clearly see that these volume bars are confirmed on this time frame as well. And we've determined, right, that if you see this huge sell volume that's preceding further development in the chart, oftentimes it will lead to a much rather big drop later down the road. Confirmation on the relative strength, which keep drawing us the picture. So bottom line, where could this stock go? Guys, within a year, this stock could be at $100. Okay, I mean, that's how bad things look. I mean, it could be slashed in half, more than half from current levels. But for those of you who just want to put a short-term trade, right, short it on the bounce. And what level would you target? I mean, it could easily, right, it pointed to a level of 222 pre-market. So if it bounces to 255 and you buy a few contracts, start closing them out by the time it reverses and hits the 220s handle again, and possibly just see if the volume is coming in higher, and maybe, who knows, can hit 210, 212 area. Okay, same conditions we're reviewing. We're going to apply it to the next chart. We've talked about that quite a bit, so I'm not going to review it in detail right this second. So considering 470 puts in EQIX on a bounce. So this one so far, I like trades like this, guys, because the stock does not move after hours. It does not move pre-market. What that does to the options, okay, is it completely deflates them. So if it opens pretty much where it closed yesterday, what you want to do is you want to wait for the initial move. And if you see this thing move higher on lower volume, that creates a really good opportunity to come in and buy the puts. So here's your chance to actually buy these options very inexpensively. And when the reversal comes in on much heavier volume, those puts could make a substantial amount of money. So this is the area we're targeting. This is why we're mentioning the 470 puts. As you can see, there's a lot of bearish things going on. Now, this stock, by the way, was upgraded to a strong buy by some analysts, and they moved the target price on it to $520. Now, I don't care about that at all, because the charts are pointing that this thing, I mean, it is at the top. So this is what we're seeing. Now, there are some things that are clearly bullish here, like the volume preceding this move higher. But besides that, everything else is bearish, right? Every time it moves higher, we see the RSI actually dropping, so downward RSI spiral. We see a head and shoulder formation over the course of the last 2 months. We see finally people are coming in. There's some signs of early developments in the distribution here. MACD is bearish. And if we take a look at the weekly chart, we can clearly see this 470 level roughly is a level where the stock is going to have a very hard time breaking above. So it's confirmed right here by this bearish MACD. It hasn't crossed yet, which is exactly what tells us that the move lower could come pretty quick. And look at how consistent this stock is as far as these head and shoulder developments. So what happens when this head and shoulder took place? The stock drops from what, 430 to 360. Next head and shoulder formation drops from 440 to 380 and then to 340. Now let's disregard this because pretty much everything was dropping in December, mid-December, right? So let's calculate 340. So $60 drop, $60 drop. Another head and shoulder hidden right against that level of 470, expecting to drop. Let's not call it a $60 drop. Let's call it a $30 drop. Is it reasonable to assume this thing could drop to 420? Absolutely. So here's your trade. We're hoping at 9:30 this thing is actually going to move higher. The initial reaction would be higher and lower volume. So let's say it's hitting the level of 460, maybe 465. Boom, we're buying 470 puts and we're closing them out when it hits this 420, 425 level. This looks like the first area of support. For those of you who want to keep the options longer term, who knows? It can hit 400 in the next couple of weeks. But, you know, you're just going to have to be very, very patient with your position. But there's so many bearish things, guys, here. It justifies this trade, especially if this thing moves higher on lower volume. And again, we completely are disregarding all these crazy upgrades, buy ratings, all that stuff. None of these things really matter in this market. So, you know, just focus on where the money is going, and it looks like they want to sell it. So considering W puts, 160, 165 puts, W is again Wayfair, sells furniture made from China. So Chinese stuff, kind of, this stock is very correlated to what's going on with China, as we're expecting the news that everybody is expecting to be positive. We're expecting to have actually negative impact on the market. I think this is a good target to hold the position over the next 2 weeks, even over the next week. And so what do we want to do with this? A couple of earnings ago, it's established at very high levels because a lot of buyers were coming in after a strong earnings report, and we're buying it all the way from like 135 to 150 level. As you can see, it did visit that level this morning at 148.67. So this is an area of support. I think that support will be broken today. But with that said, you don't want to be buying puts at the 148. What you want to do is, again, you want to come in and buy these strikes like 165, 160. You see where that gap was created pre-market, because the probability of it closing this gap on an earnings miss is not going to be very good. So if you stick with these 165, 160 puts, even if you buy the ones that expire tomorrow, you guys will be just fine. Here's how this stuff looks on the chart. I do want to say a word of caution here because it does look like a cup with a handle. Now, cup with a handle is very bullish. Observing the action pre-market so far, this is going to be a failed cup with a handle, so it's not going to break out high. We do have a confirmation on diminishing RSI as the stock moves higher, so that's why we think this cup with a handle is not going to materialize. Got some mixed action here. We did have some huge sell-offs. The stock is a huge target for a lot of short sellers, just like Tesla. Now, in this market, it really doesn't mean a whole lot. I mean, we see a lot of stocks that have been target of big, prominent, huge sellers for a long time, and they just stay at levels. At times they go higher, they go lower. So I wouldn't use that as a reason to short it. But observing the behavior and where we headed into next week, I think there's going to be more sellers here rather than buyers. They were seeing some signs of exhaustion and accumulation distribution. I think some profit taking will be happening here. This is how the chart looks on the daily. The daily clearly see there is this level of 170. The stock is having a really hard time. So that's why 165, 160 put does make sense. The RSI diminishing trend definitely is confirmed right here. A multi-top formation. The volume looks bullish, but again, that's the area I was telling you about when the stock rocketed this 140, 150 level. If it takes this 140, 150 level out, I mean, we'll see this thing back to 124. The question is, will it do it today? Because this stock, as you can see, guys, historically is capable of some crazy moves. I mean, this was a $30 move in pretty much one day right here. Could it do a $30 move lower today? I think there is a slight probability of that. However, I would not target a $30 move today. Maybe like a $15 move lower. So ultimately, target this area right here, which coincides with about 140, 142. So if you're coming in when the stock trades about 158, target this area of 140, 142 for an exit. All right, market moves. Market move 9 yesterday. And guys, for those of you that are new, if you're trying to understand the market moves, number one, study the 13 market moves formula course in its entirety. Now, I know it could be confusing to somebody that's new, that never studied any chart patterns. You really got to take your time with this if you're trying to make good sense out of this. So when I show the first slide, maybe I should change this. You guys should let me know. It says today's market move, but it also tells you the date. Actually, I didn't change this date. This is supposed to say May 1. So the move right here is the move from yesterday, which was May 1st. And it says today's market move because I'm trying to record this market moves basically right after the market closes. So I see why that may be confusing now, but just understand that the first slide represents what actually took place yesterday. The second slide represents the 2-day sequence. The third slide represents the 5-day sequence. And then the future slide that says next move actually gives you the projection of what will be next. In other words, what market move we're expecting today. So with that said, yesterday's a market move 9. It is an exotic move. These 9 and 10 moves, they only happen during the Federal Reserve announcement. That's some kind of crazy announcement the whole market expects and awaits on a regular basis, like economic data, like a job report, something like that. So here's what we've got. So initially, as stated in yesterday's video, what we have is a situation where the market is just kind of waiting for decision. It goes a little bit higher, a little bit lower. So here's the decision. Here's 2 p.m., right? The market initial reaction. Remember, I stated that in the video yesterday. Initial reaction is always not going to be the true reaction. So the market goes higher, then it drops, thinks about it a couple of times here, and finally drops. That's a move 9. The initial reaction higher, but the true reaction is lower. 2-day sequence is 4-9. So we're going from a bullish move again to a bearish move, and the bull-bear fight continues, guys. This is how the moves look on a 2-day sequence. So there's your 4, here's your 9. 5-day sequence, guys. I left this sequence longer. It actually shows you a 6-day sequence. So at this point, the fight is becoming pretty fair. You got a 6, which is a bearish move, followed by 2 bullish, bearish move, another bullish move, and a bearish move. So we got 3 bearish moves mixed up with the 3 bullish moves. So today is going to be very interesting because I think today is going to be a pivotal point where initially the market is kind of going to bounce slightly and then it's going to sell off, which puts us in a situation of another bearish move. And if that's the case, this is going to be the sequence that tells us that the bears are officially taking over. And if the bears are officially taking over, yes, you do want to load up on the bounces, on puts, and pretty much any names out there, especially the stocks that have appreciated the most. At that point, it's not going to be a matter of whether it's a good company, quality company, what kind of company it is. If it's up 40% in the last 4 months, just short the hell out of it and you'll make the money. It's that simple. Okay, so everyone should know the answer to this one. Guys, this is a 5-day market move chart. So what do you see? Guys, if you studied the market moves, you should know. How does this look? This looks like a move 11. So if we combine the pre-market action and so on, so overall yesterday was a 9, which we measure the moves by what they do during the regular session. But if you take a look at the longer time frame chart, like this is the top. Do you see that this was a miniature top? This was an 11. Do you see now they've got a grand 11? A small pyramid followed by a huge pyramid tells us a bigger move is in the making. So if the market does something before 9:30 that resembles this, it tells you, look, it could be a move 2, it could be a move 11. And clearly, the VIX supports that kind of action. Yeah, it is still low numeric, it's under 16, but the VIX uptrend is confirmed officially. It did close above 14, so it started at 1308, dropped to a low of 1297, finished at 1483. Pretty strong finish for the VIX, hasn't done so in a long time. So VIX to us, guys, does it look bearish to you? Look, if we connect the dots, this is a pretty strong uptrend. We mentioned about this like a week ago in one of the videos. I was trying to bring this chart up saying, hey, could this be the beginning of the uptrend? And now the uptrend is confirmed. So VIX no longer looks bearish. And this is pretty crazy move, right? Especially in the latter part of the day. This is percentage-wise, I mean, that's 2 points in the VIX. within 15 minutes. That's the cool thing about trading VIX, right? Unlike a stock, the percentage changes in the VIX, they could be huge. So we mentioned a VIX call idea a few days ago. So if you took that trade, guys, congratulations, you made a bunch of money. Now, next market move, projection. Now, next market move means that's what we're expecting the market to do today. So it's going to be either move 11 or 2, which are both bearish moves, or who knows, we can actually just gap lower and continue lower throughout the day. Now, the biggest catalyst is the job report tomorrow. If the job report tomorrow is going to be strong, I think the market's going to tank like crazy. This was a sequence that I was suggesting was going to take place yesterday. And so if you're paying close attention, I mentioned, hey, don't trade the market till 3, 4. So if you waited, you would have been able to come in at the perfect time. So the initial reaction higher, followed by a move lower. This is what we're expecting today, right? So we're expecting today. Now, the magnitude of this may not be as big, and this is why I've got the second slide I was showing you here, guys. But so slightly positive reaction followed by a reaction lower, slightly positive reaction higher, followed by a reaction lower. If you are paying attention, I hope you do. What does this look like? This looks like a move 11, which is a pyramid, which is the top information. Okay, key takeaways. Continue shorting the tops. That's the best strategy that has the highest probability right now. Even in best names, short the bounces. Guys, make sure you don't short the stocks at the bottom. Short them at the bounces. VIX above 15 today. If it happens, it tells us that we're about to break out to 16, 17 on the VIX fast. And if that happens, there is a possible 100-point S&P drop in the making, with the first target being at 28.46, second target being 28.11 by next Friday. So we're expecting, if the VIX spikes about 15, 16, 17 in the next 48 hours, that's meaning by tomorrow, including the job report catalyst, we could easily go for another move. 3, 2, I mean, the opportunity is here, guys. Take action. Let's roll. Make it an awesome day. I'll catch you guys in the next video.